Good morning, and you're watching Market Cafe on ET Now with me, Vinny Motiwala. Along with me is Harsh Salta as well. Harsh, a very good morning to you. SGX Nifty right now is indicating a bit of a redness that I'm seeing on the screen. But what is the overnight handover that we had from the global markets?
Right, Vinny, it's a negative handover coming through. What we're seeing is that largely US markets fell. The US debt ceiling vote is still to completely convince markets that all is well. And what we're currently seeing is that US markets have actually fallen in trade yesterday. We've seen that the Dow fell around 0.4%, the Nasdaq closed around 0.6% lower in trade yesterday, as well as the S&P 500 matched what the Nasdaq did, 0.6% lower. In terms of what happened through the month of May, the meaningful move was made by the Nasdaq. It was down nearly 6% through May, so definitely the Nasdaq is currently in focus. When we're also seeing with regard to where the Dow has actually fallen around 3.5% through May. I stand corrected, actually the Nasdaq gained 6% through May. That's what even I was wondering. So the Nasdaq actually gained around 6% or so through May. We saw the S&P 500 inch up around 1/3%, but the Dow fell almost 3.5+%. The Dow has performed quite well through the year. What we're also seeing is Salesforce was in focus, fell about 6% or so as customers backed away from big projects. Wells Fargo named American Express as one of its top recession picks. The rate hike continues to be in focus, with the Federal Reserve Governor Harker also suggesting that a rate hike pause is something that he would support. So rates continue to be in focus on the FOMC radar even now, as well as what markets continue to think of. And the April job openings have risen unexpectedly. The dollar index has reached its highest level over the last 3 months. So since the month of March, the dollar index currently sitting pretty at the moment above that 104 mark. What we're also seeing in terms of European markets, we're seeing that European markets largely are in the red as well in trade yesterday. We're seeing 1.5% cut on the DAX, 1% lower on the FTSE, as well as the Stock 600 also 1% plus lower in trade yesterday. So that's where we're at, where the global handover is concerned, Vinny.
Absolutely. And talking about the global handover, Harsh, just as you were talking about the US debt ceiling limit, we do have that update coming in over there that the debt ceiling deal is to avert default, passes in the US House and goes to the Senate. So keeping an eye on that, that's an update that we're getting in on the US debt ceiling limit. So let's just see where this actually goes across to. But moving on, and let's look at what the crude prices are doing and what are they doing this morning as well. Brent crude oil prices, when you look at it, overnight saw a fall coming in. As of now, remained almost flattish and unchanged at that $72 per barrel mark as well. Even at the WTI crude oil prices, they too are trading near the $67.83 per barrel mark as well. Obviously, oil prices have settled a bit lower. They are even early morning trade on Thursday. They opened up a bit weak as well. Mainly third straight session of fall that we saw coming in for the oil prices. Mainly one, the Chinese demand that has still not come back, and China is among the top consumers over there for crude oil prices. So that continues to be an impact, as well as just the triggering fears of oversupply amid the signs of the demand concerns. That's a factor as well. Let's not forget, 4th June, we'll be having the OPEC Plus meeting as well. What's the decision on that front? Those are factors that will impact the oil prices going forward as well. As of now, almost flattish, a decline that we saw coming in overnight. This morning also, nothing exciting there. So keeping an eye out on the crude oil prices. But the decline in the crude oil prices has been very surprising, says the global guru Chris Wood as well. But he adds that this is definitely a positive for India. Let's go across and listen into what more he had to say.
Has the decline in crude prices delightfully surprised you?
Yes, it has this year. Yes, it has, because China was. The question on the decline in crude prices was seen: is that the oil market discounting a U.S. recession, or is it just something technical? The other issue is, why hasn't the oil markets, received more of a boost from the reopening of the Chinese economy? So on the latter, I believe the Chinese economy, the Chinese stocks are acting like the Chinese economy is collapsing. But actually, the Chinese economy is not booming, but it's definitely, it's improving. So what I've heard on that is that the Chinese stockpiled a lot of oil during the last year or more. So they did opposite from the Americans. The Americans used up a lot of their strategic reserve, and the Chinese did the opposite. But the longer time goes on, the more we should get a boost to demand coming from China. So the real issue is, are we going to have a real recession in the US and Europe? Otherwise, the oil's weakness looks a bit strange.
You added
But anyway, India is obviously able to buy the cheaper oil. So that's been a huge positive, and that will continue.
When we spoke exactly a year ago, you added ONGC into your portfolio. You were bullish on Reliance, and that was a play on the oil cycle.
Well, it's partly a play on the oil cycle, but it's also just partly to hedge the risk that something happened geopolitically to cause oil to go to $150, which would be a negative. So I keep those two stocks in my portfolio. That obviously they were, since I was here, you had that windfall tax.
Yes, yes.
So that's made these stocks less attractive than what they were before, because they're not as geared to higher oil prices as they used to be.
Right, so that was Chris Wood, of course, on oil. But let's quickly look at the events to keep an eye out on today. You had the US congressional vote, so that's going to be a game changer, at least hopefully for markets, because that should be a positive. That overhang should probably go away. What we're also going to expect to see is more on the macro front. We did see the India GDP data come through much better than anticipated for FY23 full year as well as Q4. But we have manufacturing PMI, which is Purchaser Manager Index data, are going to come through for India, US as well as the UK. We're going to see US initial jobless claims, which will be the key which the Fed looks out for when it comes to how the economy is really slowing down and how rates are kicking through. The ECB monetary policy meeting is also slated for the 1st of June, which is today. It's a fresh new month of trade. And let's also look at some of the corporate action which is in store for us. We have AB Capital, which is going to consider a fundraise, and we have Krithivasan, who's going to take over as TCS boss on the 1st of June, which is today. So effective today, he's going to take over as well. We also have the SpiceJet case. Among other news, we have the SpiceJet case as well. The NCLT is all set to hear that plea today. So keeping our eyes out on all of those as well.
Okay, and let's get in some global update. First, like I was highlighting about the US debt ceiling limit. Now, the debt limit deal has won the House passage and easing the US debt default concerns as well. The House passed the debt limit legislation forged by President Joe Biden and Speaker Kevin McCarthy that would impose restraints on government spending through the 2024 elections and avert the destabilizing US default as well. Lawmakers of both the parties joined to approve the bill 314 to 117 Wednesday evening, sending the measures to the Senate for consideration as the default deadline draws near. The vote cements Biden's reputation from pragmatism as well as working across party lines, and he seeks second term and allows McCarthy to claim success in the first majority test as the Speaker.
Well, yeah, super important, that one, right, Vinny? It's going to, bring some balance to markets going forward. But according to Federal Reserve's Beige Book, economic activity was little changed overall in April and early May. The expectation for future growth deteriorated a little, though contacts still largely expected a further expansion in activity. The report also pointed towards a slower pace at which the job market grew, but even as that happened, prices rose moderately, though the rate of increase slowed in many areas.
And staying with the commentary from the Federal Reserve, the Philadelphia Fed President Patrick Harker has said that the central bank should go ahead and skip the rate hike for June at its upcoming policy meeting. He also adds that their model forecast shows no recession ahead. According to him, the unemployment rate is going to tick up towards 4.4%, but the US economy looks incredibly resilient at this point.
Well, that'll be the dream state, Vinny, a soft landing as you would call it. But going into company-specific news, Johnson & Johnson on Wednesday faced their first trial in almost 2 years over claims that the baby powder contains asbestos, which is a cancer-causing element. This comes amidst the company's efforts to seek settlement in thousands of similar cases in the bankruptcy court.
And let's shift focus and talk about the richest man again, and that is no doubt Elon Musk. And that focus is going to be important because Tesla's chief Elon Musk has once again topped that list of billionaires and surpassing luxury brand tycoon Bernard Arnault. And Musk was in a stiff competition with the 74-year Frenchman for the top spot this year. Remember, Arnault first surpassed Musk in December last year as the tech industry struggled and luxury showed a resilience in the face of inflation.
Right, and beating estimates, India's GDP grew at 6.1% in the last quarter of FY23, year on year, of course, Q4 FY23. The Indian economy recorded a full year growth of 7.2%, retaining the fastest growing tag. Remember, the Reserve Bank of India had estimated Q4 FY23 real GDP growth to be at 5.1%, while SBI Research expected growth of around 5.5%. In FY23, the economy grew at 13.1%, 6.2% and 4.5% in Q1, Q2 and Q3 respectively on an annual basis. In the March quarter, the manufacturing sector output rose around 4.5% year on year compared to the 1.1% contraction in the previous quarter. The numbers reflected in the Chief Economic Advisor V. Anantha Nageshwaran's optimism, as he said India can look for another year of solid economic performance. The CEA also added that the risk to the projected 6.5% GDP number, which is the estimate for FY24, is evenly balanced, and there is a good chance that this number may actually exceed that particular estimate. Listen in to his views on this particular GDP number.
Highest in about 8 years at 23.5% of GDP. And the private consumption to GDP ratio is again at a high in the last 16 years. And gross fixed capital formation, while it is 34% of GDP, specifically looking at the fourth quarter, year on year, the share of GDP of GFCF, gross fixed capital formation, was 35.3%, and in nominal terms, it was 31.7%. So overall, as we have been saying that the government's investment in infrastructure over the last several years is beginning to crowd in the private sector investment, as you can see in the new project announcements and also from the data released by companies on their own cash flows.
For the whole year, the growth would be more than 7%. And and then obviously the recovery is on the way. I do not think that this is a blip. I think there is nothing to show that the economy, so that this is a one-off thing. I think this will continue. I think this brings in a lot of good news. Of course, depending upon what happens to the monsoon this year, that will determine the agricultural growth. Other than that, I think both manufacturing and service sectors will continue to do well, because there are no serious constraint, sort of on the horizon.
Numbers are
okay, and let's move on and talk about the fiscal deficit as well, because healthy data is coming in on the macro front over here. The fiscal deficit for the year ended 2023 has narrowed to 6.4% in line with the government's expectations. Fiscal deficit stands at 17.33 lakh crores in FY23. Meanwhile, the fiscal deficit for the first month of FY24 stands at 1.34 lakh crores, which is a 7.5% of the fiscal deficit target set for FY24. So let's keep an eye out on this data as well, Harsh.
Absolutely, ton of macro data to keep a track of, at least today. Right, we've spoken about global markets and global news. Let's quickly move on to what Asian markets are really looking at We're looking at a slight negative on the Shanghai, a fifth of a percent lower for the Shanghai, but we're looking at green across the board otherwise, and that positivity is largely led by the fact that we've had a resolution on the US debt ceiling, especially in the House, still to go to the Senate, but in the Senate, largely the vote is largely assured, at least that's the expectation. And the 5th of June deadline will be met. And this debt ceiling actually resolves matters with regard to debt in the US till 2025. So you have that overhang literally going away, and you can see the Asian markets reacting to that. The Asian markets were mixed in early trade and currently well in the positive. In fact, a slight positive bias even for the Nikkei as we speak. Let's move on quickly. The Kospi, slight negative, a third of a percent lower. We're seeing even the ASX 200 in the green, up around 10th of a percent or so, and we're seeing the Hang Seng also in the green, up around 0.5%. So that's where we are, where the Asian indices are concerned. A third of a percent of cut on the SGX Nifty is where we are seeing it at the moment. Still holding that 18,600. Of course, as we roll closer to market open, we'll have to wait and watch as to whether the Nifty can actually hold on to that 18,600 mark. But that's where we're at, Vinny.
Absolutely. That's the update coming in on the Asian markets as of now. SGX Nifty muted to a bit of a red start is what we could expect.
Right, welcome back. You're watching Market Cafe on ET now. 1st of June brings with it the end to the earnings season. So FY23 earnings is done. Here's a look at what's in store in FY24. Which companies are expected to report the highest earnings growth in FY24 and which would decline the most. Somit is here with all of that.
Well, firstly, we'll start off with the companies that are expected to report a profit in FY24 as against a loss in the last financial year, that is FY23. And firstly, if you see, it's Indigo. The graphics here are wrong, but we'll get that corrected. Now, Indigo's profit is expected to come in at around 105 rupees as against a loss of around 7.9 rupees EPS that the company had reported in FY23. And this is largely in the back of rising traffic, higher yield, higher ticket prices, and a lower fuel cost. Then there is Aditya Birla Fashion, which is expected to report an EPS of around 2.4 rupees as against a loss of around 0.4, and that is largely because of its improvement in the demand environment and moderation in losses when it comes to the new businesses of the company. When it comes to V-Mart, it's a recovery in its same store sales growth, turnaround in its legacy unlimited stores, and moderation in LimeRoad losses that will aid the company. When it comes to HPCL, for that matter, the company is expected to report an EPS of around 48.2 rupees as against a negative EPS of 49 rupees in FY23, and this is largely on the back of stronger refining gains and a higher marketing profits in the financial year FY24. Then we come to a list of companies that would report the highest growth in their EPS in FY24, and firstly on that list is Zee Entertainment, and this is owing on the back of a stronger ad environment, rising content cost, and one of that Mart FY23. These factors won't be present in FY24, and on the back of these, the company, if you see, the EPS is expected to be positive. Then there is Nuvoco Vistas and Birla Corp. Both are cement companies. Higher demand, higher cement prices, and lower cost is expected to aid the EPS of these companies. When it comes to Nykaa, it is lower losses in the fashion business, faster growth in the beauty, and with major expenses related to employee and warehouses done in FY23, FY24 EPS is expected to rise in this financial year. When it comes to Tata Motor, there is the uptrend across JLR and India's CV and PV business, and tight cost control would bolster its profit. When it comes to then we see the companies that are expected to report a drop in their EPS in FY24 as compared to FY23. Firstly on that list is Sapphire Foods. The EPS is expected to fall because there was a one-off in FY23 that had bloated the profit, so absence of that factor. Then there is demand slowdown and higher raw material cost. When it comes to Fine Organics, it's the demand slowdown and higher raw material cost. When it comes to Oil India, it's the lower oil prices, and there could be some one-off in FY24 that the analysts are expecting related to service tax and GST that is expected to pull down the EPS. When it comes to Coal India, is the lower coal prices, higher wage cost that is expected to impact the EPS. And when it comes to Laurus Labs, it is the high base and no big CDMO product and lower margin expectations, because of which the EPS is expected to come down in FY24.
Okay, thank you so much for that, Samit. But let's move on. And massive investments in the upgrading food storage facilities across India. The Union Cabinet has decided to upgrade the food storage infra with an investment of 1 lakh crore rupees. Now, we are joined by my colleague Sumit Chaturvedi, who's here to give us more details on that. But before that, also, let's go cross and listen into Anurag Thakur, what he had to say as well.
जितनी पैदावार है उसके मुकाबले केवल 47% की भंडारण की क्षमता है। अब हम सहकारिता के क्षेत्र में विश्व की सबसे बड़ी भंडारण योजना की शुरुआत करने जा रहे हैं। अभी तक कुल मिलाकर 1450 लाख टन भंडारण की क्षमता है। अब 700 लाख टन भंडारण की क्षमता सहकारिता के क्षेत्र में शुरू होगी। भारत में कुल मिलाकर देखा जाए तो 3100 लाख टन फूड ग्रेन्स की पैदावार होती है और इसके ऊपर कितना पैसा खर्च होगा? लगभग 1 लाख करोड़ रुपए की लागत से विश्व की सबसे बड़ी अन्न भंडारण योजना हम सहकारिता क्षेत्र में शुरू करेंगे। इसके अंतर्गत हर ब्लॉक में 2000 टन का एक गोडाउन बनाया जाएगा और जो फंक्शनल पैक्स हैं इसमें 500 टन से लेकर 2000 टन की क्षमता के गोडाउन्स बनाए जाएंगे। जैसी जहां पर जरूरत होगी उसके अनुसार बनाया जाएगा। और यही नहीं, हमारे देश में लगभग 63,000 फंक्शनल प्राइमरी एग्रीकल्चर कोऑपरेटिव सोसाइटीज हैं। इनको ट्रांसफॉर्म करने की भी हमने शुरुआत की। आपने देखा इसमें कंप्यूटराइजेशन हमने पहले ही कर दिया है और कंप्यूटराइजेशन के साथ साथ अब इनको 25 तरह के अलग अलग काम करने की अनुमति भी मॉडल बायलॉज में दे दी गई और किसान अपनी फसल उस गोदाम में देकर उसी प्राइमरी एग्रीकल्चर कोऑपरेटिव सोसाइटी से 70% तक का ऋण भी ले सकता है और सही समय आने पर अपनी फसल मार्केट में बेच भी सकता है। तो इट्स अ विन विन सिचुएशन फॉर वन एंड ऑल, for the primary agriculture cooperative societies, for the farmers, for the consumers, and for the country as a whole.
It's going to be the world's largest food grain storage capacity in cooperative sector with an investment of over 1 lakh crore rupees. 700 lakh ton of more food storage capacity will be created through godowns, through other systems across the country. It's in a way deleverages or de-risks the overall food storage, grain storage system. It will be chaired by, the committee will be chaired by Minister of Cooperation, but other ministers will join. That's from the Ministry of Agriculture and Farmers, Minister of Consumer Affairs and Minister of Food Processing Industries. So it's going to be a cooperative mechanism through which the world's biggest food grain storage system will be formed in the cooperation sector. Farmers will be benefited in many ways. First of all, it avoids the overall de-risking. So these godowns will be spread throughout the country. Also, farmers can take loan up to 70% on their produce which is kept there. In addition to that, it will avoid the wastage of food, which is also very important aspect. It will also help farmers in getting fair price for their produce because they will not be damaged or get wastage, and they'll be kept at a storage facility near to their place. It's also going to be linked to PDS system. That is one of the big benefits of the system. So in regard to that, big announcement was made in Union Cabinet today. It has been done keeping in mind overall food security of the country.
Right, thanks for that, Sumit. But with that, we'll slip into a very short break. More on the other side. We'll go stock specific, so do stay tuned.
Welcome back, and you're watching Market Cafe on ET. Now it's that time of the show where we get to what are the stocks to watch out for, what are the brokerages saying this morning, and we have Ashesha as well as Lisa joining us in the studio. Good morning to both of y'all. And Ashesha, first I'm going to come to you. What are the important stocks that we're keeping on the radar today?
Hi, good morning. So let's start off with Coal India, and that is because Government of India is intending to sell stake in the company via an OFS or offer for sale. They will be selling 1.5% with an additional green shoe option to sell another 1.5% 50% stake in the company. This will be done at a floor price of 225 rupees per share, a discount of 7% to yesterday's closing price. This OFS will be open for non-retail shareholders today, and for retail shareholders it will be open tomorrow. So on the back of this news that has come in, Coal India will be in focus today. Moving on to a couple of oil marketing companies where ONGC, Oil India, paint companies, tire companies, all of them will be in focus, and that is because Brent crude is now at $72 per barrel mark, which is the lowest level that we have seen since December 2021. This is negative for oil marketing companies, but it is a positive for tire companies, paint companies, cement companies. So on the back of this, all of these counters will be in focus today. Apart from this, additionally, airline and aviation companies, the likes of Interglobe Aviation, SpiceJet will be in focus, and that is because ATF prices in Delhi have been cut by 7% on a month-on-month basis, and they now stand at 89,303 rupees per kiloliter. So on the back of this news that has come in, apart from the crude oil price impact, aviation stocks will be in focus today. Moving on to MOIL then, where there's some price revision which has come in. They've raised prices of some grades of manganese ore by about 10%. A couple of block deals happened today. First up, let's talk about Sona BLW, where promoters have sold 3.2% stake yesterday. This was done at a price of 504 rupees per share, and Government of Singapore and Society Generale are some of the buyers in the block deal that took place. HDFC Life, in that also promoter group is exited. Aberdeen has sold remaining 1.67% stake at a total value of about 2,000 crores. So these were a couple of block deals that took place. On the back of this, these counters will continue to be in focus today.
Right, thanks for that, Ashesha. Let me go straight to Lisa actually, because she's going to talk to us about all the brokerage notes that have come through since yesterday. And Lisa, talk to us about the key ones that you're looking at.
Yes, well, good morning. Let's start with Bharti Airtel, where the shares are trading at an all-time high. CLSA has come out with a report on Bharti Airtel, and they have maintained a buy on the stock at a target price of 1,115, which entails an upside of around 20%. They see highly favorable risk reward in the stock, and particularly on the postpaid segment, they see 5G boosting the segment, and they also see accelerating gains in the subscribers, and the tariff rate is at a significant premium. Moving on to Apollo Hospital, Jefferies has come out with a note on Apollo Hospital post their Q4 numbers. They say that the Q4 was a miss on the back of Apollo 24/7 higher cost entailed, and they have guided for a break even by Q4 FY24, and the losses will be reducing from there on. On the occupancy, the management has guided for a 70% occupancy rate going forward. So these are the stocks that will be on investors' focus for today.
Okay, that's the update coming in on the brokerage note. But Brent crude, that had fallen 1.2% and is around the $72 per barrel mark. This is the lowest levels that we've seen coming in since December 2021. Somat is here with more details of this, why the crude is falling as well. Somat, take it away.
Well, on a closing basis, if you see Brent crude prices were trading at around $72 per barrel, which is the lowest since December 2021. However, the 2023 intraday low is still at around $70 per barrel level. Now, why crude prices are trending lower? Firstly, it's the rising US crude inventories. US crude inventories are higher by around 5.2 million barrels compared to last week, and this is the biggest gain that we have seen in inventories since February 2023. Along with this, there is demand concerns. Global recession concerns has also led to crude prices to a low of around December 2021. Now, along with this, there is a resilient Russian exports still coming in the markets and a stronger dollar. Now, usually stronger dollar makes makes crude expensive for importing countries. Now, if you see the Chinese manufacturing activity has also contracted faster than expected in the month of May. Now, PMI was down at around 48.8 versus 49.2 in April, and against versus estimate, if you see, that stood at around 49.4, and this is also one of the reason why crude prices have been trending lower. Now, key thing to watch out for when it comes to crude prices would be the next OPEC meet. In fact, the first OPEC meet of 2023, which is expected to hold on June 4th. Now, there have been mixed signals coming in from major oil producers regarding a cut. So that is the key event to watch out for when it comes to crude oil prices. However, this drop in crude oil prices benefits India because India imports nearly 85% of their crude requirement, and every $10 per barrel drop in crude prices narrows the the current account deficit by around 14 to 15 billion US dollars, that is nearly 0.4% of the GDP. It decreases retail inflation by around 50 to 60 basis points and wholesale inflation by around 125 to 130 basis points, and also narrows the trade deficit gap by around 12.5 billion US dollars. When it comes to sectors and companies, for oil marketing companies like Indian Oil Corporation, BPCL, HPCL, Chennai Petro, and there is MRPL, the impact is mixed because lower crude oil prices does benefit the marketing margins, but then oil marketing companies do keep an inventory, because of which there could be some inventory losses for these companies. When it comes to oil explorers like ONGC, Oil India, Vedanta, HOEC, it's negative because oil is the key product and lower oil prices means lower realizations, which could impact their profitability. Now, according to analysts, a $5 per barrel drop in crude oil prices impacts ONGC and Oil India's EPS by around 7% and 12%. When it comes to paint companies, it's positive because 40% of their raw material cost is oil and its derivatives, so lower crude oil prices would benefit their margins. When it comes to lubricant manufacturers, 50% of their raw material is related to crude. When it comes to aviation, nearly 40% of the total cost is fuel cost, so that is also a beneficial for them. When it comes to tire companies, it's synthetic rubber, carbon black, and chemical. Now, these are all derivatives of crude oil prices, and lower crude oil prices means lower prices of these chemicals, which would benefit their margins. When it comes to cement companies, nearly 40 to 50% of the total cost is either directly or indirectly related to crude, and there is a host of specialty chemicals for them. Crude oil derivatives are a major raw material, and they will also stand to benefit because of lower crude oil prices.
Thanks so much for that, Somit. We'll quickly move on and look at some of the key takeaways from management meets. We've got a couple of them lined up, and Nirmal Bang has listed out the highlights of both Tata Chemicals, and Investec has listed out the takeaways for PI Industries. Both of them met up with the respective managements. Lisa's here to give us a lowdown on the details on that.
Well, yes, let's start with Tata Chemicals first. Nirmal Bang, they met up with the management, and what the management highlighted is that the soda ash market that remains tight, and the supply that is lagging behind the demand, even with the new capacity additions that is being added. And most importantly, what they said that they are not disturbed by reports of the Inner Mongolia capacity additions coming up, because the addition that will be around 1.5 metric ton per annum, and it will be mainly absorbed in China itself. And remember that they had taken a recent price cut of around 3.5%. So the management said that this was mainly taken in line with the domestic competition. Well, moving on to PI Industries, Investec met up with the management, and the management sounded quite upbeat about the outlook going forward. They said that they will be sustaining a 15 to 20% year-on-year growth, and that will be on the back of volume ramp-up, strong demand, and also fresh registrations. They will be investing around $10 to $15 million in acquired pharma assets, and also their recent footprint, API footprint in EU region, that will help them tap new customers and also fetch them better pricing. So these two chemical stocks, Tata Chemicals as well as PI Industries, investors have to keep an eye on these stocks.
Okay, surely keeping an eye out on these ones as well. But Lisa, thank you so much for that. And on that note, we are absolutely out of time on this edition of Market Cafe. It's Checks Nifty indicating a bit of a muted to a negative start. And a goodbye from Harsh, myself, as well as the team who put this show together.